Imagine you've just spent like 6 months helping a patient process this really severe, deep-rooted trauma, and they are finally making breakthroughs. The trust between you two is absolute.
Right. The ideal scenario.
Exactly. And then they go out to their mailbox, they open a letter from their insurance company, and it's a surprise bill for $3,000.
Oh.
All because of a single misplaced billing code on your end. In an instant, that therapeutic trust you work so hard to build it's completely shattered.
Yeah, it is a terrifying scenario. And the worst part is it happens all the time.
Right.
Yeah.
Today, we're talking about why the most important tool in your clinical arsenal might not be, attachment theory or CBT.
Yeah.
It might actually be your billing process.
Because if you're a mental health therapist listening to this, you spent years in grad school mastering the profound intricacies of the human mind.
So much time.
Right. You were trained to hold space for people in their darkest moments.
Yeah.
But there's this massive, incredibly common blind spot. Amidst all those years of rigorous clinical training, you likely received zero training on how to actually run a financially viable business.
Zero. Which is exactly why we are doing this deep dive today. We are pulling insights from Griebel Billing Services, or GBS.
Yes.
This is a consultancy run by Linda Griebel, who brings over 30 years of experience in the mental health billing field.
30 years is a long time in that world.
It really is. And what gives her curriculum so much weight is that she actually spends 16 of those years working directly for a well-known mental health therapist.
Right, so she hasn't just studied this from some, abstract corporate accounting perspective.
Exactly. She's been in the trenches of a real private practice.
She intimately understands that unique pressure cooker you operate in. I mean, medical billing is complicated enough on its own.
Oh, totally.
But when you layer it with the intense emotional labor of therapy, it becomes a completely different animal.
It really does. And you can actually see that understanding right in the GBS logo from our source material.
Oh, right, the logo.
Yeah, it's this really soothing, swirling sphere of blue and green.
Yeah, it's very calming.
It perfectly captures that centered, organized energy that therapists desperately wish they had when they're, staring down a massive stack of denied claims.
Which is usually panic, not calm.
Exactly. And that is our mission for you today. We want to extract the practical, real-world steps from Linda's materials to reduce your administrative stress.
So you can stop drowning in paperwork and just get back to patient care.
Right. Okay, let's unpack this, because running a private practice really means you have to play two completely different roles. On one hand, you are the highly empathetic clinician sitting in the therapy chair, but on the other hand, you have to be the ruthless, highly organized CEO sitting behind the desk.
And that CEO hat has to be firmly on your head before you even, arrange the pillows on your therapy couch.
Oh, for sure.
The financial foundation you lay on day one is going to dictate your stress levels for years to come. And the sources really highlight that this starts with some crucial initial decisions about insurance panels.
Wait, hold on, though. When you're just starting out, you have rent to pay, student loans, and a totally empty calendar.
Yeah, you're hungry for clients.
Right. Shouldn't you just accept every single insurance panel you possibly can? Isn't casting the widest net the safest business move?
You'd think so, right. But what's fascinating here is that casting a wide net is actually a fast track to burnout.
Really?
Yeah, Linda's materials strongly emphasize deciding exactly which panels to get on and why.
Okay, why though?
Because insurance companies often use complex credentialing and coding requirements as a form of, gatekeeping.
Oh, to manage their own costs.
Exactly. If you accept a panel that reimburses at a significantly lower rate, but they require twice the paperwork and constant authorization calls,
Ooh, that sounds exhausting.
you are going to exhaust yourself for very little return. So strategic selection is key.
I see.
You have to curate your revenue streams by choosing panels that offer fair compensation for your specific region and specialty. That is what creates a sustainable practice.
So it's really about quality of revenue, not just the raw quantity of patients.
Exactly.
And speaking of that professional foundation, the source material talks about establishing your fee schedule early on and making a really critical choice about how you identify your business.
Right, the tax ID.
Yeah, specifically
Yeah.
billing using a tax ID number versus your personal Social Security number. But if I'm just a solo practitioner, why does that even matter? It's all my money anyway, right?
It matters deeply for two reasons. First, when you submit a claim, your identification number travels through dozens of digital portals, clearinghouses, payer systems.
It's everywhere.
It's everywhere. If you use your Social Security number, you are exposing yourself to massive identity theft risks.
Oh, wow. Yeah, that's a good point.
An employer identification number, or EIN, protects you.
Yeah.
But secondly, and honestly just as importantly, it establishes a firm professional boundary. When you link an EIN to your National Provider Identifier, your NPI, you are signaling to the system and to yourself that you are a formal business entity. You're not just an individual collecting checks.
Okay, that makes complete sense. You're building a firewall around your personal life.
Precisely.
But even with an EIN and, carefully selected panels, you still have to physically get the claims to the insurance companies.
Right, the actual workflow.
Yeah, and this brings up the operational choice between using a clearinghouse versus billing online directly through individual payer portals. I'm a little fuzzy on the mechanics here. A clearinghouse basically acts as a middleman, right?
Essentially, yes. Because every single insurance company, Aetna, Blue Cross, Medicare, they all have their own highly specific, incredibly rigid formatting requirements for claims.
Right.
If you bill directly, you have to log into each portal and manually format your data to their exact liking.
Oh, I get it. So a clearinghouse is basically like a universal translator at the United Nations.
I love that.
Like, you plug in your standard raw data once, and the clearinghouse instantly translates it into the specific, localized dialects required by each different insurance company.
Yes.
So your claim doesn't get rejected just for speaking the wrong language.
That is a brilliant analogy, yes.
Yeah.
It scrubs the claim for errors and translates it. It might cost a small fee, but it saves you hours of administrative time and drastically reduces the risk of formatting denials.
Which is huge.
It is. And that ties directly into Linda's next major foundational point, which is choosing a competent, reliable bookkeeping service early on.
Which I imagine is more than just don't throw your receipts in a shoebox until April.
Much more. Bookkeeping in a private practice isn't just about tax compliance. It's about having real-time strategic data.
Like what kind of data?
It tells you exactly what your realization rate is, meaning of the panels you carefully selected, which ones are actually paying out efficiently,
Oh, okay.
and which ones are dragging their feet and starving your cash flow.
Right. But here's the thing. Even if you perfectly optimize your clearinghouse and you have pristine bookkeeping, your denial rate will still be absolutely abysmal if you drop the ball before the patient even sits down.
Oh, absolutely.
Which brings us to the daily workflow and what Linda calls the golden rule. Verifying benefits prior to the patient coming in.
It is the absolute non-negotiable step.
But I have to push back on this a little.
Okay, go ahead.
If a client calls you and they're in the middle of a severe mental health crisis, forcing them to hand over their insurance details and wait for you to run a verification check before they can even come in and cry.
Yeah.
I mean, doesn't that feel incredibly cold? It feels like the exact opposite of holding space for someone.
I hear that. And it raises an important question about what it actually means to protect a patient.
Right.
In the moment, yes, it feels transactional. But remember that $3,000 surprise bill scenario we talked about earlier?
Yeah, the nightmare scenario.
Verifying beforehand tells you if they have a massive deductible that hasn't been met. It tells you what their specific copay is. And crucially, it tells you if they even have mental health coverage carved into their plan at all.
Oh, because sometimes they don't even have it.
Exactly. Doing this administrative work up front is actually a form of clinical care.
A form of clinical care.
You are acting as a shield, protecting the patient from systemic bureaucracy so they don't experience financial trauma on top of their emotional trauma.
Wow. Reframing the administrative work as a necessary shield for the patient is incredibly powerful.
Yeah.
It makes the CEO hat feel a lot less ruthless.
It really does.
But the workflow doesn't stop once they are in the door. The sources highlight that you have to meticulously track authorizations and outpatient treatment reports, or OTRs.
Right.
What exactly is the mechanism there? Like, why do I have to keep proving to the insurance company that therapy is working?
Because insurance companies operate on the principle of medical necessity. They are paying to treat a condition, not just for general self-improvement.
Ah, I see.
So an OTR is your documented proof that the treatment plan is actively addressing the diagnosis. And you have to submit these within their strict, timely filing periods.
Timely filing period.
Yes. Every payer has a clock that starts ticking the moment the session ends. If you miss that window, the claim is denied, regardless of whether the service was necessary.
And the clock gets even more confusing when you step into the maze of complex payers.
Oh, definitely.
The curriculum specifically calls out Medicare, TriWest for veterans, workers' comp, and victims of crime programs. Can you explain why these are so much more difficult than standard commercial insurance? Like, what happens if a patient loses their job mid-treatment and goes on COBRA?
COBRA is a perfect example of this complexity. A patient might elect COBRA and think they are covered, so they keep coming to sessions.
Right.
But if their former employer's HR department hasn't finished processing the paperwork with the insurance carrier, your claims will bounce back as denied for lack of eligibility.
Oh, no. So
You are left holding the bag for sessions you already conducted.
that is awful.
Or take TriWest. The rules change dramatically based on whether they are the primary or secondary payer.
Right.
If a veteran has Medicare as primary and TriWest as secondary, but you bill TriWest first without a primary denial attached, the whole claim is rejected.
It's like navigating a minefield blindfolded.
It really is.
And then there's the coding itself. The source mentions utilizing proper diagnosis codes and specifically brings up V codes. I'm a little lost on that one. What is a V code and how does it actually work in practice?
So a V code is used to classify occasions when circumstances other than a disease or injury are the reason for the visit.
Like what?
Let's say a couple comes to you for marriage counseling because they are constantly arguing. Neither of them has a diagnosable DSM disorder like major depression or generalized anxiety.
They just have relationship distress.
Exactly. Standard insurance often won't pay for that because there is no illness to treat.
Oh, I see.
A V code allows you to accurately document the problem without fraudulently diagnosing someone just to get the claim paid.
Okay, so mastering V codes keeps you ethically compliant while still trying to navigate the payer's rules.
Yes, exactly.
Which perfectly transitions us from the faceless mechanics of insurance to the single most stressful part of the job for many clinicians.
The human element.
Yes, the money talk with clients. Here's where it gets really interesting. Therapists are inherently trained to be completely selfless in giving.
Right.
Their entire focus is on emotional well-being. So pivoting from processing deep grief to enforcing strict payment boundaries feels entirely unnatural.
It feels transactional in a space that is supposed to be purely relational.
Yeah.
But if we connect this to the bigger picture, it's really helpful to look at Linda Griebel's specific background. She was thrust into the managed care era back in the 1980s.
That was the massive shift in the industry, right, where HMOs really took over.
Exactly. Before that, therapists largely billed for whatever they did, and insurance paid.
Wow, the golden age.
Right. But the managed care era introduced heavy scrutiny on every single session to manage costs. Linda learned how to navigate that highly restrictive environment, and she realized that dealing with patients comfortably and with conscientious sensitivity regarding money is a learned skill.
It's not innate.
It is not innate.
And her curriculum provides very clear guidance on this, including the absolute must, ensuring patients pay at the time of service. You collect the full fee or the copay right then and there. You do not let balances accrue.
Never. Letting a client run up a tab changes the power dynamic in the room.
Oh, true.
Suddenly, the therapist is a debt collector and the client feels guilty or avoidant. It ruins the therapy.
What if you, the provider, are not on the patient's insurance panel? Like they want to see you, but you're out of network.
Linda's rule is crystal clear here.
Yeah.
You collect your full fee up front directly from the patient.
Okay.
You provide them with the documentation often called a superbill, and then the patient takes that to their insurance company to seek out-of-network reimbursement.
So you don't wait for the insurance to pay you.
You do not wait for the insurance company to pay you because you have no contract with them.
That requires a lot of confidence to state those terms clearly. And what about the concept of balance billing? The sources mention rules around balance billing patients when you are contracted with their insurance. Can you explain how that works?
Yeah, so balance billing is when a provider bills the patient for the difference between their standard fee and what the insurance company agreed to pay.
Okay, give me an example.
Let's say your fee is $150, but you are contracted with Blue Cross and your contracted rate is $100.
Right.
Blue Cross pays you $80 and the patient pays a $20 copay.
Okay, that makes 100.
Right. You cannot turn around and bill the patient for the remaining $50 to reach your normal $150 fee.
Oh, wow.
Yeah, when you sign a contract with an insurance panel, you agree to accept their rate as payment in full. Balance billing a contracted patient is almost always a violation of your contract and can get you kicked off the panel.
That is a critical distinction to understand before you start sending out invoices.
Definitely.
And I love the insight that when a therapist approaches billing with this kind of conscientious sensitivity, when they have clear boundaries, explain exactly how the money works, and don't engage in confusing practices like balance billing, it actually strengthens the therapeutic relationship.
Predictability creates safety.
Yes.
If a client knows exactly what their financial obligation is from day one, they don't have this underlying anxiety about hidden costs. They can actually relax into the therapy.
So true. So we've laid the blueprint with panels and tax IDs. We've mastered the daily workflow of verifications and complex payers, and we've learned how to confidently navigate the money talk.
Mm-hmm.
Now it's time to zoom out. How do you protect this practice you've built and decide what your life as a clinician will look like long term?
This is about safeguarding the business, and it starts with the contracts or intake sheets you have your clients sign on day one. These are your first line of defense. They establish the ground rules for cancellations, payment expectations, and communication.
And then there's the heavy legal stuff.
Yeah.
Confidentiality and high pay laws, specifically as they pertain to billing, because simply sending a bill with a psychiatric diagnosis on it is a massive transmission of protected health information.
Absolutely.
The source also emphasizes navigating subpoenas and other legal pitfalls. So what does this all mean? If I'm a brand new solo practitioner sitting in my fresh new office, do I really need to be losing sleep over legal subpoenas on day one?
It's not about losing sleep, it's about risk mitigation. Anticipating these scenarios is how you define your quality of life.
Okay.
Understanding the ethics of patient management and having strict, legally compliant policies in place from the start prevents a minor issue like a messy divorce where one partner subpoenas your therapy notes from becoming a practice-ending crisis later on.
So you build the infrastructure strong so it can withstand a storm. I get it. It's like insurance for your insurance practice.
Yeah.
And part of that long-term view is also exploring alternative revenue streams so you aren't entirely dependent on traditional panels.
Right.
Linda's curriculum brings up alternative payers, like EAP employee assistance programs. How does setting up an EAP revenue stream actually work?
Well, employers pay for EAPs to offer short-term, solution-focused counseling to their employees. It's usually like 3 to 6 sessions.
Oh, okay.
The employee doesn't pay anything, and it doesn't run through their standard health insurance deductible.
That's nice for the patient.
It is. To access this, you have to separately credential yourself with EAP networks. The reimbursement rate is sometimes lower, but it brings in a steady, reliable stream of referrals.
I see.
And often, if the patient wants to continue after their EAP sessions are up, they transition smoothly into your standard practice.
That is a fantastic strategy to build a caseload. But inevitably, even with EAPs, verified benefits, and clear intake sheets, someone isn't going to pay.
Yeah, it happens.
Which brings up the pros and cons of using collection agencies.
That is a deeply personal choice. You have to weigh the financial recovery of a bad debt against the potential damage to the therapeutic relationship and your community reputation.
Because once you hand it over,
Once you hand a patient's file to a debt collector, the therapeutic container is permanently broken. It's a prime example of where the clinician's heart and the CEO's spreadsheet collide.
that's heavy.
Wait.
And finally, as your practice grows, you face scaling decisions. Choosing your office space, and the big one. Deciding whether to hire staff or not. Do you bring on an admin to handle all this verifying and billing, or do you expand to a group practice?
And every single one of those decisions loops right back to your financial foundation. If your billing workflows are chaotic when it's just you, hiring an admin won't fix it.
It'll just magnify the chaos.
It will only magnify that chaos. You have to understand the systems yourself before you can delegate them.
Wow. Okay, we have covered a massive amount of ground today. We started by looking at how to build a solid financial blueprint by strategically selecting insurance panels and utilizing an EIN and a clearinghouse to protect your identity and streamline data.
We navigated the incredibly complex daily workflows, emphasizing that verifying benefits prior to service isn't cold. It's a protective shield for your patient.
Yes.
We explored the mechanisms of OTRs, V-codes, and the specific traps of complex payers like COBRA.
We tackled the psychological hurdle of the money talk with clients, learning that clear boundaries like collecting at the time of service and never balance billing a contracted patient actually create a safer, more predictable environment for therapy. And finally, we zoomed out to look at protecting the practice legally with ironclad intake policies and diversifying with EAPs.
The central takeaway here for you, the listener, is this. Focusing on the lucrative side of your business is not greedy. It is not a betrayal of your clinical values.
Not at all.
Managing the financial side expertly is exactly what affords you the energy, the resources, and the peace of mind to provide life-changing mental health care.
Absolutely. You cannot pour from an empty cup, and you cannot run a practice on a negative bank balance. But before we wrap up this deep dive, I want to leave you with a final thought to mull over.
Okay.
We talked about how Linda Griebel's experience navigating the managed care revolution of the 1980s shaped her highly structured approach to billing. It changed the landscape entirely.
It forced therapists to adapt to a system of high scrutiny.
Right. So, looking forward, what will the next decade bring? We are seeing the rapid rise of AI doing automated coding and universal telehealth platforms where payments are handled invisibly by third-party apps before the video even connects.
Right. It just happens in the background.
Will the financial side of therapy eventually become completely invisible to the patient?
That's a fascinating prospect. Will technology completely remove the friction of the transaction?
Or is the money talk, that inherently uncomfortable moment of establishing value, boundaries, and mutual respect face-to-face, will that always remain an essential part of the therapeutic boundary? It's something to think about as you watch the business of therapy continue to evolve. Because at the end of the day, whether you are utilizing the latest AI billing software or looking at a paper ledger, you still have to wear both hats.
You do.
You have to be the empathetic clinician, and you have to be the ruthless CEO. You just have to make sure they're talking to each other.